Okay, I think it's 1 o'clock. I think we're allowed to start. Okay, great. So if anyone's here who normally follows my webinars, you'll know that what I generally do is ask you guys to tell me what markets you'd like me to have a look at, and I'll try and analyse them to the best of my ability and talk you through what I'm doing to try and give you an idea of how I look at things. In the meantime, while I'm waiting for you to make any requests, I'll run through a few markets that have caught my attention maybe, just to get us going. And one thing I was looking at is the dollar index, in fact, just because I've been looking through a few pairs and I noticed that the dollar was looking a bit overextended, so I had a look at the dollar index, which is not something I usually follow, but anyway, this is the dollar index on a weekly chart, and we've had a good 3-week rally, very strong rally, as I'm sure you know. So we're just hitting this trend line here, which I'm trying to highlight, and that goes back to about this time last year, so it's about a year long, this trend line. You can see we hit that almost perfectly yesterday. The trend line was at, I've got at 84.56, we got a high of 84.55, so I mean we hit it and came right back down from there. That's the third or fourth time we've hit that trend line. Markets are getting a bit overbought, not so much on the weekly, but certainly on the daily chart, getting very overbought. You can see this on the stochastic there, which I like to use. Yesterday we had a bearish candle, the first one for a couple of days anyway, so I think you call that, I'm not sure what they call that, dark cloud cover or something, but anyway, I call it a reversal day. Okay, so we were looking at the dollar index, and just to recap, we were looking at the 1-year trend line which the dollar index had hit. I'm not sure where my sound cut out, but we're starting again. So we hit that perfectly yesterday, the trend line, the 1-year trend line, and being overbought on the daily chart, we've put in a reversal day, which is a new high followed by a lower close. That may have signalled, when you couple that with the fact that we're very overbought and we hit a 1-year trend line, this tends to indicate to me that the dollar rally has run out of steam at least. I'm not saying necessarily we're going to see a big collapse, the same that we saw. I am saying we may have topped out here and at least go sideways. If you look at the 4-hour chart, a realistic target for some profit taking would be down around the 83.70, 83.60 level, just using Fibonacci targets there. So really, unless we're going to close above the 84.60 level, can't really see, well, I would favour a drift lower at least, unless we can get a close above yesterday's high, which would really mean getting a close above 84.60 really. So just wanted to alert you to potential for some dollar weakness over the next couple of days perhaps. On that note, as I said earlier, if you'd like me to look at any markets, please just let me know. But on that note, have a look at the euro. Start with the weekly chart. Now the weekly chart isn't particularly bullish at all. We've broken below this trend line here, which goes back to about this time last year. However, you can see that we're just hovering above the May low, which was 127.97. We've got to 128.06 so far this month in July. So we're just hovering above there. That, you know, it's a monthly low that should act as some support. So we have a look at the daily chart now, and we're very, very oversold. We've had some really steep declines lately. So I was looking for some trend lines just to try and get a grip on what's going on here. And this trend line goes back to, where are we now? 11th of November, just joining up these lows here, so it's a very clear trend line. And of course, we've just tested that perfectly yesterday, or the day before, was it? The trend line comes in at 128.00. I've got a low of 128.06, could barely be any closer. And then the next day was a fairly positive candle. Yesterday's candle was fairly positive. We closed higher on the day, within the previous day's range. So possibly, bearing in mind we've got this trend line and we're holding the last month's low, we're oversold. The fact that the dollar index itself looks like it could be a little bit toppy. I'm putting all this together and starting to think maybe the euro can at least have a little bounce. And if that is the case, we could look for 129.50 as the minimum target, which is only a cent away from here, 100 pips away from where we are at the moment. But certainly wouldn't rule out pushing through there eventually and getting up as far as 130.39. That also ties in quite nicely with the 100-day moving average, which is at 130.36 today. It's going gradually lower, so that will decrease as the days go by, not by a significant amount. So it's possible, we could see it up around the low 130s at least. And short term, just looking at the 4-hour chart, well, we've recovered from a very oversold situation here, so we're drifting lower again. But just keep an eye on that euro. It's downtrend at this stage. I'm not looking for a huge rally that's going to be sustained for any length of time, but certainly over the next few days it's possible, and holding shorts any longer is probably a little bit risky now, unless we get a close below that trend line. So 128.00 really is probably going to decide where we go, and as long as we hold above there, I wouldn't be keen to be too short this one. If we do break lower, then below 128.00, we're probably looking at these lows we saw in April, 127.50, 146. That should be the first stop. And then we've got 126.80 as a decent Fibonacci support level, 126.80 coupled with a November lower, 126.62. So I'd be looking at that band probably eventually at some stage if we see closes below 128.00 for the euro versus the US dollar. What should we look at next? The Aussie looks quite interesting. I often get asked to look at that in these webinars, so got that on my list of things to look at, and it is getting quite interesting. So obviously we've had a big old collapse in the Aussie as well. That's been all over the financial news, so I'm sure you're all aware of that. We had quite good support around the 91.43 level, but we shot through there last week and overran slightly to 90.37. So we overran by about 100 pips or so. But on the grand scale of things, that isn't really an enormous amount when you consider we've come down from 105.80 area down to 90.30 area. It's a huge move, and 100 pips is fair enough as a margin of error. So okay, weekly chart, very oversold, hovering around good support, and actually just managing to creep back above there today. Daily chart got very oversold. And the last few days we've just been heading sideways, but yesterday's candle was quite positive with the higher close, and today we're pushing higher again. So today we're just trying to break above the high of the last 3-4 sessions, which is around the 91.80, 91.90 area. We have managed to get as far as 91.99. So let's see where we close tonight, but I've got a feeling we might be able to push above that 91.90 area, close above there, and that then might set us up for a correction at least. Again, I'm not saying any major bull run, but a correction at least just to ease those oversold scenario that we've got there at the moment. Realistic targets, we're going to use some Fibonacci's for that. So 92.15 is our first target, and we've got close, as I said, to 91.99. So a close above 92.15 would be more positive, and then I think we could start stretching up towards 93.25 at some stage before the end of the week. Maybe, don't know, but certainly into next week. We've got some highs around 93.40 from the end of June. You can just see those little tweezer top things there, 93.45. So once we get through 93.45, it could be quite a good run up to 94.02, 94.14. That would be the ultimate target for this correction, for this bounce, and there's probably a good chance that is as far as we'll go. So as I say, I'm not getting overly bullish. I'm just looking for a respectable correction in this down move, and I don't really see it much through 94.00, 94.15 if we manage to get that far, but that does look like a realistic target. I'll just have a quick look at the 4-hour chart to see where we are with that. Whoops. And yeah, that's not telling us an awful lot really. We could stick a trend line on here probably. Let's see if we can. That's not very useful, but this one's just short term, shows that we've had a little breakout. Nothing to get overly excited about, but we are pushing away from that trend line. So not massively overbought on the 4-hour chart, so there is room to go higher. Let's see if we can make it through that 92.00 area at least, and then 92.14 would be the next level to try and push through. Okay, so that's the Aussie and the Euro. I'll look at the Canadian while we're on the subject. We looked at this last time. I forget when the last webinar was, a couple of weeks ago probably, and I think we were just, well, yeah, we would have been just hovering above this trend line. Someone asked me to look at this, and I'd noticed that we'd broken above here, and I said as long as we hold above the trend line, which is fairly obvious, we'll go higher. So we've managed to do that, but then this week it's looking a bit more negative. So getting overbought on the weekly chart, but I mean, a pullback to this trend line wouldn't be a huge surprise. We'll have a look at a daily chart in a minute just to see what that's telling us, but this Canadian is starting to ease back now after having a good break above that trend line. So yeah, we've got very overbought on the daily stochastics, and that's starting to turn a little bit negative. There isn't actually any particularly bearish candles on there, nothing to say that we've run our course. But hang on, just let me have a look at some levels here. No, nothing going on there. Okay, so again, it's really just a case of some profit taking from an overbought situation. We're just easing below the 9-day moving average now, so there's probably a little bit further scope to go on the downside. Let's look for some realistic targets for this correction. So 104.70 looks like a reasonable target. That fits in quite nicely. We've had a low there 2 or 3 days ago as well. So 104.70 I'd say is quite realistic. What happens after that I'm not really sure. But if we got as far as 103.90, 103.80 area, I'm guessing that may be the end of the correction at this stage. So these are just two levels to keep an eye out for: 104.70, 103.90, 103.80 area, or 104.00, 104.80 area probably. Give it a bit of room because that's quite a big level there. I'm guessing it would take a couple of weeks before we get anywhere near that, and by that stage we'll probably be oversold again. So probably continuing that uptrend. So yeah, I'm not looking for a change of trend. I'm just looking for some corrections now. I think we've just got a bit overextended, as I've said. 4-hour chart saying the same sort of thing. We've got a bit overdone, and we're just looking for a pullback here. I'm guessing, actually, looking at the 4-hour chart, that if we get as far as 104.70, that will hold initially, and we might get a decent bounce off there. But I don't really see us through 106.09, 106.0009 for a little while longer. Maybe not till next month. So one to keep an eye on. Gold has also had a good bounce. Lots of people trading gold, I'm aware of. So, yep, gold. Okay, so we got very oversold last week. End of last week, we hit 1180. Now you can see this candle here was very clearly bullish. We made a new low, but we closed above the previous open, not quite above the previous high, but it closed above the previous open. So I think they call that an engulfing candle. For me, it's a reversal day, almost a key reversal day, but well, it would have been if we'd have closed above the previous high, but we didn't quite make that. But still very, very bullish. Very well, a clear indication that the downtrend may just have ended for the time being, especially when you consider how oversold we were on the daily chart. We were looking for some indication that that might be the end of it. We managed a little bounce, not as much as we'd have hoped. We got to 1267. My target was actually this 1273 area. We fell a bit short of that and eased back, probably because we got a bit overdone on the 4-hour chart. Yeah, we did get a bit overdone on the 4-hour chart, so we pulled back from there. And then, as you can see, as the 4-hour chart got a bit oversold, we managed to take off again a little bit. So, same situation as the dollar. Really, it's not looking for a change in trend, but we are looking for just a little correction. And I still think that the safest strategy would be selling into rallies into gold at the moment, just as buying into dips for the dollar is probably the safest strategy, rather than getting aggressively long gold or aggressively short the dollar. So, shorter time period, 1247 is holding up quite nicely. That was our support level for today, and you can see why it's a fib level. If we can hold on here, there's every reason why we can get back up to 1267, maybe even 1273. Maybe we'll finally hit that 1273 target, but I'm not sure we'll get any further really. Watch 1273 anyway. If we see a close above there, then yeah, we can push on higher to 1300, 1302, but 1273 is going to be a struggle. 1267, 1273, so that's the area to watch, I would suggest. On the downside, 1237, 1234 is going to be the most important support. So if we start getting below 1245, look for 1237, 1234 area. That should be decent support. Health status of the Aussie dollar. I'm not sure what you mean by that, but I wouldn't fight the trend at the moment. We've found some decent support in the Aussie dollar, a good Fibonacci level on the weekly chart. The all-time low of the Aussie dollar, let me go back to it for you. It's a long way off. We're way away. There you go. It gives you an idea. It was only 2008 where we were down at 60.09 and we're now at 91.91. So we're way above that. And if I scrunch this up even further, just to give you a proper picture, see how far this data's back. Bloomberg's pretty good, it goes a long way. So yeah, 2001 we were down at 47.76. You can see I've been looking at the chart because I've got fibs going all the way back there, so we're a long way away. There you go, that gives you a bit of a longer term picture going back, to give you a clue. Okay, so we will have a look at crude oil, which was on my list for today because there's some interesting things going on there as well. Okay, weekly chart. The important thing here is that trend line going back to the sort of middle of 2011. So this is the area we're looking at. I'm just trying to highlight that trend line there. You can see it's pretty important. Now this week we were pushed through there. Now last week we hit it bang on, the trend line almost to the tick. In fact, I've got a high of 103.68 and the trend line, well anyway, to within a few cents of it if it wasn't bang on, very close. So this week, on Monday I think it was, we managed to push higher. We got to 104.12, so roughly 50 cents above that 103.68 area, but we couldn't hold it. And we were getting overbought on the weekly chart, and on the daily chart, very overbought as well. There's a small Fibonacci level there at 103.43, and we're back below that. So yesterday was quite interesting, quite important. We tried to pierce the trend line, we couldn't hold it. We've got a very slight reversal day there with the new high and a slightly lower close. And that to me is indicating that we had a huge rally, haven't we? We've had a couple of weeks at least of straight line gains, and that looks like we've run out of steam at the moment. We'll give you some targets for that. This 4-hour chart is quite interesting for shorter term trades. You can see we've got a trend line going back to 26th of June, and we're just managing to hold that. Even today we've managed to hold it. The trend line I've got coming in at 102.20 area, and today's low is 102.31. Just been down there just now actually. We've managed to bounce off there, but I'm guessing at some stage we're going to break through that and at least get to 101.50.40 area, which would be this black line here. Yeah, so we'll see what happens there. I would imagine we'll bounce off that 101.50 area, 101.40 area at first, and we'll see what happens from there. That's as far as I'd like to project at this stage, but that'll take maybe a day or, well, we'll probably see that before the end of the week, 104.50.40. Wouldn't be surprised to see that before the end of the week, and we'll see what happens there. If we start breaking below this 101 area, which is sort of around these little 3 candles here, then I can see us selling off down to 99.75, but that's something for maybe next week perhaps. So yeah, crude oil, keep an eye on that. I personally think it's probably not worth running in these longs any further. If you have been long and you manage to ride that nice little wave all the way up, I think that's probably done. So yeah, keep an eye out for that. Yesterday's low was 102.13, so that's worth keeping an eye on as well. You can see quite clearly why I'm saying that. We're at the upper end of the range. Bit too early to suggest whether we might hit the lower end of the range, but we've got some interesting areas around 97.85, that sort of thing. So just keep an eye on that one. Silver. Silver I've started looking at lately and got a few subscribers to it because it's quite an interesting market. I think they call this a hammer or a hanging man. I forget, I'm not very good with my candlestick terms, but that can often indicate at the end of a trend. We've had a big downtrend on that. And so far that's holding, although we are easing off a bit again. The weekly chart is so oversold, but it's been that way for months. Silver's really taken a bashing. Now this little setup here can often be quite bullish, but hasn't played out quite yet. The big red candle, the candle unchanged. I think they call it a spinning top or something. And then the next candle was a new low, but a huge reversal with a very strong close at the high of the day. In fact, I think we even closed higher than that big red candle. So anyway, that's very positive. Now I was expecting silver to take off, but because we were under such a big downtrend, that it's been held under pressure. But as long as we hold above that 1822 level, we've still got a chance of a rally. Don't rule it out. Again, just a corrective rally, not the beginning of an uptrend, I don't think. So look out for 1980 area, 1980, 1990. We'll need a close above there. We haven't managed to close above there. You can see some days we've managed a peak above it, but we certainly haven't managed to close above it. So we need a close above 1980 to start getting a bit more positive on silver. And if that happens, we should at least be able to test this trend line, which I've got in here at this stage around the 2040 area. And then a break above there, we might be able to get as far as 2075, 2085, but I wouldn't see it any higher than that. If we get that far, I'd say that's probably enough of a correction for this bounce, and the downtrend then likely to resume. Just have a look at the 4-hour chart, see if that's telling me anything different. But it isn't really. We're getting a little bit overdone on the top side, but potentially still room for a little bit higher. So this is all kind of tying in with the dollar, gold and silver tying in with the dollar, and perhaps oil as well. I'll have a look at cable, because that's been moving around quite a bit today. Sterling versus dollar cable is quite interesting, and I'll show you why. Blow this one up a bit. Okay, so this is a weekly chart. As you know, I like to go as far out as possible when I start having a look to get. And goes back to 2009, in fact, right to the beginning of 2009. So in effect, we haven't really gone anywhere in that time. We've been stuck in quite a big range. But recently we've been selling off. So I've got 148.55 as quite an important fib level, and we tried this back in March, and we got to 148.32, so we tested it on the day and bounced off there quite sharply, and then had a really good recovery. So the last 3 days we sold off, last 3 weeks I should say, we sold off aggressively again and tested that level today. I think we had some weak manufacturing numbers or something out of the UK, which pushed us lower again. Not significantly lower than yesterday's low. Yesterday's low was 148.58. Today's low 148.33. So we've given that low from March a really good test today. 148.32 the March low, 148.33 today's low, and we're now managing to recover that 148.55 Fibonacci support level. So what does all that mean? Okay, we go to the daily chart. This in effect is a nice double bottom, a big double bottom as well, which could be quite significant. We'll have to see where we close today, but if we can get a rally into the close, and well, yesterday's close is 149.50, so we've got quite a way to go. even if we could close halfway up yesterday's candle, which would be around sort of 149.25 area, that would be relatively positive, and may signal a double bottom. There, we're very oversold in the stochastic. So anyway, I think what I'm trying to tell you is I'm feeling like there may be a chance that cable's bottomed for a little while, and we can start to build a rally into the end of this month for those reasons. I hope that makes sense to you. The 4-hour chart isn't saying a whole lot at the moment. There aren't any particular interesting candles, although I'm just looking over at an hourly chart and there's a little bit of a hammer there. So anyway, it's a pretty low risk trade to buy cable at this level, needless to say, because your stop is very clearly just below the previous low, which is 148.30 area. So give it a little bit of room just in case we spike down and take out some stops. You might want to maybe put a stop in below 148.00 if you fancied buying this here. And I'm thinking it might be a low risk trade, which I've done myself, in fact. Because if we do take off, then you could be looking at, actually, let me just take this off, that's not relevant. But just to put some fibs on here to give us an idea, 150.50 would be a realistic target. That's our first 23.6% Fibonacci retracement level. So risk-reward wise, if you're going to be risking sort of 70 pips from here to potentially make almost 200, certainly 150 or so, that looks like a good risk-reward to me. Just let me read this question. Apology, I meant recent Aussie dollar low in relation to demand from China, etc. Oh, okay. Fundamentals, I really not going to comment on in this webinar. This is purely for technicals only. I stick to technicals myself personally. I don't have time to be reading all the endless news, and that's just what I'm going to focus on in here today. Sorry, I can't do any of the fundamental stuff. Okay, we'll move on to another currency. Sorry about that. Wish I could say more, but I think it's probably a big topic that I'm not well enough read to tackle. Okay, so the Japanese yen is looking quite interesting. This is the dollar versus the yen, which has obviously been on a tear this year. Entry price on cable. Well, yeah, let me go back to cable. That is a good question. We've got 148.33 as the lows in March and again today, and we bounced off there nicely. So we've missed the chance to buy at that level. We're now trading 148.70. I mean, anywhere from here down to 148.33 probably would be a really nice area. If you didn't want to wait and you were paying 148.70 area where we are now, well, you're looking at a potential 70 pip loss if we keep going. How can we make an easy 10 pips today? There's no easy 10 pips, I'm afraid. That's not really what I'm here for. I'm not trading second by second, I'm afraid. Yeah, so back to cable. Yeah, you're looking at potential 70 pip loss. But I would always, when I do a trade, look for at least 2-to-1 risk-reward, profit versus loss. And I think that there is that potential for this trade now. So say, for example, you paid 148.70. There is a chance that you can make 140 pips on that, and you'll be getting out around, my maths isn't very good, but what's that, 150.10 area? I think that's a realistic proposition for a profit. So that's what I would suggest may be worth doing. And if you're happy with that risk reward, if you're happy to risk 70 pips to try and make 140 pips, well, that could be an opportunity for you there. Okay, dollar yen has been having a good run, and then this is the weekly chart. So I'll just open this out a little bit. You can see this thick red line. I've blown it up because it's quite important. We took off, we had a great big rally, then we had a 4-week sell-off, and now we've had a 4-week recovery. We bounced. This is charting quite well, actually, the dollar yen, because we sold off to a good support at 93.57, where we held just above there. We got to 93.79. So we bounced just 20 pips or so above that big weekly support level, which isn't bad when you consider that, that we came all the way down from 103.74. I think 20 pips will allow as a margin of error. We've managed a good bounce up. And we're now retesting that trend line that we broke below. We retested it 4 weeks ago, and that held, and we came back down, and then we've now retested it last week almost exactly, and again this week. This week it comes in at 101.87. We've been to 101.53. On the daily chart, we are getting very overbought, so I'm starting to think that this is as far as we go, really. Yesterday's candles, sorry for all the lines and stuff, I hope that's not too unclear, but there's a reason why I put them in for today's webinar. Yesterday's candle was a little bit negative. We made a new high, but we closed lower, so again another reversal. We haven't managed to we didn't manage to beat the previous day's high, which was 101.23. Today we got to 101.30, but we're easing back from there now. So yeah, there's a risk again. This is just tying in with potential dollar easing over the next few days, just as a correction. So this kind of fits in as well, really. This is the same trend line which we've just managed to hold below. I'm just going to try and highlight that for you now. So yeah, we retest that trend line. I've got a feeling we're going to start backing away from that trend line now. We're overbought. The trend line is quite important. This is a corrective rally. Let's see what happens, but also want to draw your attention to the fact there's a slightly wonky head and shoulders pattern here. Head and shoulders patterns don't have to be perfectly symmetrical, and I've put these little curves in there to try and give you an idea of how it's working. We had a nice big rally, obviously, and then we've got a shoulder here. That doesn't really count as the shoulder because that would be a slightly wonky neckline. So I've chosen that as a neckline, which I think looks correct. And then if we top out here, we've got something of a head and shoulders pattern. We won't know for sure until we come down to the neckline at 94.40 area and see what happens there. But if we do break lower, then you are talking about something far more significant to the downside. But at this stage, it's just way too early to predict that. I just wanted to make you aware that the longer term picture, if you look over the last just let me answer this question. You heard buy dollar and sell gold in rallies. Yeah, I think that's probably the case. Just to recap, I'm looking at the dollar, which looks a bit overextended at the moment. It's been very strong this year, and I think it might just have overstretched itself a little bit. So perhaps over the and gold, yeah, maybe a little bounce, a corrective bounce. Same for silver, which kind of ties in with the dollar move, but these are just corrective moves as far as I can see at this stage anyway. We'd have to look a couple of months down the line to see if there's any sort of more topping patterns to signal anything more significant to the downside. So yeah, these are just corrective, and in my opinion, if we do see a dollar sell-off, we'd be looking for some decent support levels to get long again. And the same for gold, any decent rally, it's just a correction, and we'd be looking for some resistance levels to sell into at some stage. I just wanted to alert you to that. It's very early, you know, we're only just topping, and there's only just potential signs of it. So, you know, I just started looking at it yesterday and thought this was definitely worth a mention. Just really more a case of if you've managed to ride the dollar all the way up and ride gold all the way down, you've probably had a good run, and it's probably not worth risking holding those positions anymore. If you've seen a nice profit, I guess that's a good way to put it, really. Okay, so that's the dollar versus the yen. We've done the Canadian, we've done the Aussie, we've done the dollar index, we've done the euro. I do often get asked about the pound versus the euro, so I'm just going to have a quick look at that one. I haven't looked at it for a little while, but you can see that we're trading within a nice channel over the last, say, 3 years or so, and we're at the bottom of that channel now. We've managed to bounce off it in March. We managed quite a good retracement back up to close to the 38.2% fib at 119.37. Didn't quite make it, but got pretty close. Got to 119.08, so within 30 pips or so. Anyway, we're easing back again. We got whacked today. We got whacked today on some manufacturing numbers, as I said earlier, I think. So watch this trend line. This is a very long-term trend line going back 3.5 years. This week it comes in at 114.71 area, 114.70. So if we do keep going down, there's 100 pips below where we are now. We've got quite good support, and we would hope that would hold on the daily chart. We're just getting into oversold territory. So yeah, there is room on the downside still, perhaps, for this one. Let's just keep an eye on it, but see what happens around 100 pips lower. That might be a buying opportunity. It does look like we'll probably be quite oversold at that stage, and it is a big trend line, so we can keep our fingers crossed and hope it bounces off there. Shorter term, there's no reason to say that we're not going to continue lower, so keep an eye on that one. Dollar Swiss, I'll have a look at it. I don't look at it normally, so just give me a second. Okay, dollar Swiss. Pretty dull, judging by the weekly chart. We've had a good run. We're sitting above the 200-week moving average, which is quite positive. We were heading up towards the upper end of the range. We've got quite a big trend line. Well, quite a lot higher, 99.14 area. We're way off that, so that's not particularly significant at the moment. We're not really going anywhere. I mean, we've hardly moved, as you can see, for over a year now. We've been in a range between 99.72 down to 90.22. Fairly wide range, but we've been staying in it, so clearly the trend is just sideways, so I can't really make any comment on that. Shorter term, on the daily chart, what have we got? Let me see if I can put some trend lines on here to get an idea. So we're just in a range that's starting to narrow, really. Just put this red so you can see it. Okay, so we're in a narrowing range. It's been narrowing for a year and a bit, year and a half or something like that, should we say. We're heading up towards the upper end of the range, starting to get a little bit overbought on the daily chart, so it's getting a little bit risky. Is there more room on the upside? Yeah, there is really. Yesterday was slightly negative, but that's been negated today now with the break higher, so no point in fighting the short-term trend, or the daily trend at least. We're going higher. We've got some congestion up here around the 97.60, 97.90 area, so we could see another 100 pips on the upside before we start running into anything major. And then, of course, just above it, we've got this trend line, which I've got around the 98, 10, 20 area at the moment. Can't really say any more than that at the moment. Doesn't really tell me much. I mean, you can see we're not trending in any particular direction. Short-term trend is up as we head towards the upper end of the range. 4-hour chart, no, not really telling me anything. You know, the idea is that the trend is your friend and you go with it, so there's no reason to fight that at the moment. There's nothing telling me that this is going to come to an end. We're getting a bit overbought, so that doesn't mean we won't go lower, but there's nothing for me to tell you that it will happen, so not safe to be getting short that one, I would suggest at this time. Anything else worth looking at? Actually, I'm going to show you the Nikkei. I don't know if anyone trades the Nikkei, but it's quite an interesting chart, so I just thought I'd have a look. Looks a bit like the yen chart. Okay, yeah, it does look like a bit like the yen chart, which is obvious because the Nikkei has been tracking the yen this year, weak again, and has meant cheaper exports, and Nikkei has been looking very positive. So yeah, same as the yen, we had a very strong rally, sold off, and we have had a bounce. So again, we're looking at a trend line that goes back quite a long way. 2.5 years, is that something? No, year and a half, sorry, something like that. And we're just approaching that trend line again. We are starting to get overbought on the daily chart. We are approaching a big fib level, relatively big fib level at 145.80. So we backed away from there 2 days ago and put in quite a negative candle. I thought that was it. I thought we'd head lower, but we're managing to recover again over the last day or two and close in on that 145.10 high from 2 days ago. That's the high of the bounce. But the important area to watch is 145.80 area. 145.80. What's that trend line now? 146.30. So anyway, around that 146 area, give or take 20 points, should be pretty tough resistance. And I'm wondering if that's going to be the end of this bounce. We will see. 4-hour chart is not really saying anything in particular, but just keep an eye on that. The Nikkei might have run out of steam. I thought the S&P had yesterday. S&P had quite a good resistance at 1635, but it sort of held for most of the day, but we pushed through it again today. And 1647 was the target, and we managed to hit that now. So today's target has been hit in that market. I don't know if anyone's interested in the S&P. If you want me to take a look at it, I can. What else is relevant? Just trawling through my list. S&P and FTSE, yeah, sure. Okay, I was mentioning the S&P. Where are we? Here we go. S&P is one of my faves. Okay, so S&P weekly chart. Sorry, there's lines all over the place, which does look a bit confusing, but I think the important level to watch is this one. Let me just try and show this line a bit more clearly. Okay, so if I just move this out, this is the weekly chart. Well, actually, probably more easy on the daily chart, but we'll just have a look at the weekly chart. Okay, so we've had a good run up, corrected like most stock markets, and now we're rallying again. Well, we've gone a little bit further than I expected, actually. I thought we'd hold around this mid-1630s, but we've pushed higher. So we've managed to retest this trend line, which we've got at 1648. Today's high, I think, so far is 1647. So we've got pretty close. Daily chart. Not quite overextended, actually. We've broken through a very short-term trend line, so that's no longer relevant. I'll take that off because it might just be confusing things. But let me put that trend line on here, the weekly one. Where does that start? 1383. So that's here, I think. Yeah. Okay. So if I blow this up. Right, there we go. So we're testing that trend line. We're just trying to push above it actually today. On the daily chart, the trend line is at 1641 in fact, so we've pushed quite a way through there. So if we close above that, that's going to be quite important again. You can see I was looking for a head and shoulders pattern. This is the neckline here. That right, left shoulder, head, right shoulder, and I was thinking we're going to top out here potentially. I thought this trend line would hold it, and I thought we might be looking at a head and shoulders pattern. So today's going to be quite interesting and see what happens. I mean, at the moment, if we close above that trend line, which is at, as I said, at 1641, 1642, then we can probably push on higher. And really, the mid-1650s is a reasonable target. 1655, 1657 likely to be seen before the end of the week if we can close above. And that would kind of blow my idea of head and shoulders out the window. So let's see what happens there. However, we close below the trend line at 1641 would be more negative and might just see us back away from there. Moving averages I use are 9, 21, 55, 100 and 200. I don't really pay too much attention to the 9 actually. I don't really know why I have it on there. And I'm not a great believer in crossing moving averages. I know a lot of people rely on them, but I tend to think they signal things a little bit too late, so I don't pay a great deal of attention to that. I just use simple moving averages. I don't do the weighted or anything like that. The ones I really pay attention to are the 100 and the 200. They tend to act as quite good levels. I guess more people are looking at them. It would make sense. Longer term traders are going to be paying more attention to those sort of areas, and so I do as well. I keep the 9 and the 21 and the 55 on. The 55 is worth keeping an eye on actually. because it can. I mean, you can see here, in fact, it's worked quite nicely. It's the green line. I'll try and highlight it. You know, it has worked quite well as support and resistance, so worth paying attention to. Short-term traders, yeah, 21 and 9-day. Keep an eye on that, I guess. Oh, we've got to wrap up. Okay, so we're done, I think. Thanks very much, everybody. Appreciate you tuning in. There's the website. If anyone needs to contact me, then you can grab me through there and I'll do whatever I can to help you. Thanks very much indeed.